Hi, this is Euro USD pair, and today it's Monday 24th of June 2013, and the time is 6:54 GMT. We are looking at the H4 chart, 4 hours time frame of the pair, and I'm going to use a very powerful trade setup strategy, one of my favorites, which is based on Fibonacci retracement levels. The first rule for the trade setup to be followed, to be executed, is that we must have a last active wave. Here is our last active wave, bigger than 150 pips. Our last active wave, this upward move, was 580 pips, pretty huge, and that shows that there is a huge profit potential also. Second prerequisite is that price has reversed and has entered the trigger zone. The trigger zone is this, I have colored it light blue, and it's between 38.2 and 61.8 Fibonacci levels. Before I continue, I must tell you that when you draw the Fibonacci levels, you have the option to put your 0 point here, as I have put it, or to the opposite side. The ratios, the Fibonacci ratios, remain unaltered. So don't worry if where my 0 is your 100 or vice versa. Now, I usually put the 0 point where the correction starts. That's the principle, the basic rule I have in my mind every time I draw the Fibonacci levels, but it's subjective. I put this so that I know that price has reversed, has retraced at 50% of its last big move, or 61.8 from its last big move. Okay, that's the meaning of the way I draw the Fibonacci levels. So I'm going back to our trade setup. Once price enters the trigger zone, and that happens when one candlestick closes inside this zone, it doesn't matter if it is a bearish or a bullish candlestick, we just want one candlestick to close inside the zone. Okay? The next thing we are looking for is to see one whole candlestick, not just close, one whole candlestick, either above 23.6 Fibonacci level, here where I have placed this green arrow, or below 75.0 Fibonacci level, where I have placed this red arrow. Is it enough to enter long if we see one whole candlestick on the H4 chart closing above this Fibonacci level here, or below this Fibonacci level here? No, it's not enough. We need a filter, we need the confirmation, and the confirmation comes from RSI. We go to the daily chart though. We don't stay on the H4 chart, we go to the daily chart and check if RSI is above 50. If it is above 50 and we have one whole candlestick above the 23.6 Fibonacci level, we can enter long. We enter long and we place our stop loss 100 pips below our entry. It comes somewhere here below the Fibonacci level. It comes 30 or 50 pips, depends on how far from the level is your entry point. Okay. On the other side, if we see that a whole candlestick has closed below the 75 Fibonacci level here. We go to the daily chart and check if RSI is below 50. If it is below 50, we enter short, we sell, and we place our stop loss 100 pips above our entry, and it comes somewhere here, our stop loss. Our stop loss comes a few pips above 75.0 Fibonacci level. Now, as trade progresses, we trail our stop to the next Fibonacci level. If we entered short, we will trail our stop to the next, above the next Fibonacci level. If price has progresses 1 and another 1, 2 Fibonacci levels. Okay, if price is approaching the next Fibonacci level, then we trail our stop here. The opposite happens for the long trade. If we have entered long here and price goes up, then we wait for price to go through this level and reach the next one before we trail our stop from here. Okay. That's how we progress, and by trailing our stop, if price at a certain point hits our stop, we are out of the trade. We exit the trade. That's a criterion. Of course, if you are more experienced, you can use other tools or other criteria for your exit. But as a rule of thumb for this system, it's good to trail your stop according to this basic rule. For every 2 Fibonacci levels, you trail your stop 1. Okay. So this is it. I believe this is going to be a very profitable ride because of the magnitude of the last active wave. So thanks for watching and happy pips.